this is going to be an update on MATIC. There's one TA that I forgot to mention. So it's basically trend lines and trend line time. So I just pulled up a chart here that I made real quick. And so if this is true that this is wave 5, there's also there's an algorithm that's following this chart, and basically this is how they make it. So they follow wave counts like this, or swings. So this is a swing high, this is swing low, and what they do is they build stuff off of it. So they can either build like Fibonacci's and like just whatever bots that they can get their hands off of on. So what I found here, that there's a bot trend line, and there usually is, definitely on in crypto. So it's called bottom to bottom, and then it's the rule of in Elliott waves for the algorithms. So it's right here. You can see that spot on. That's exactly where the volume picked up, either selling or buying. So right here was actually the top, and then we created something called a reaction. So, and then it continued and then did the same. This is called a reaction. This is a benchmark that we now use. This was the benchmark that we use in price and time, and then it continued. This was the benchmark, so the same type of reaction, the same type, continued, same type in time, and a little bit with price, and then continued, and then this is an abnormal move. So these are normal reactions, these are abnormal reactions, which basically you compare with the next rally here, and you can see that it's kind of looking similar. So there was a consolidation pattern and a consolidation pattern. In the rules of Elliott waves, we have a rule of alternation between 1 and 2. So this one here was 28 bars, and this one here, so the rule of alternation means that, okay, so if this one retraces to the 618, this one's going to retrace higher, like a 382. Also, if this one's short in time, this one's going to be long in time. So these are basically the rule of alternation. You alternate. So the trend lines is something that's not talked about very often, but it definitely is an algorithm that is trading based off of these Elliott wave pivots. So this yellow one that I have here is, and this white one that I have, this one here I have a lot of back tests, and I know that it works. And just look at this chart here. I know that this one works, and I actually caught the top on this one, but I was not aware of this. I just made this chart like a few minutes ago, so I had to bring it to your attention because this one here is a yellow. So this white line is pulled from the 1 and 2. So, and then you draw a middle point, and then you extend it, and I extended it 3 times, and so it gives us some decent dates here. So July 7th and August 24th, so a little bit of a sell-off, right? And that's going to be our next reaction type of thing, normal reaction or abnormal. I would say this is an abnormal reaction, so we can honestly expect a trend change, in my opinion, because I also believe it's wave 5. So the question here is that we'll get into for your own strategy when it comes to investing, and obviously trying to accumulate low and and make money, right? So we have this yellow trend line right here. So this one here is, and I don't have that much back test on it, so that's why I'm kind of a little cautious about it. But we have a trend line time coming up tomorrow, so I needed to bring this to the attention. So these are pulled from wave 2 and to the wave 4. Okay, and then I so basically bottom to bottom and then bottom to top. These are rules in Elliott wave theory. The target on this one is all the way up there. It's possible, but then the time is right here. When the time is up, it's pretty much done. And then they would sell out. That's basically what the algos do. And then you got something like that. It's a matrix. It really is a matrix. It's a system, and they have computers algorithms that make the matrix. And once you can discover what that is, you can understand that they buy and sell on those matrices, right? So There's like Bitcoin is such a good example of those matrices, but MATIC is also a good one because we can see where the volume. This volume is confirmation that the bots are set on this, and I want to see if tomorrow is going to be a nice one here as well. Okay, this here is also important trend line, but it's not as important because it's pulled off of a different trend line, so it's kind of just an angle. But yeah, so these dates are important. So this one caught the top, and I want to see where's the next one is all the way up here. So the question is, are we going to literally just come back down here and do something like that, or are we going to continue upwards here? So that's my question, and I'm gonna try to help you find out what that's gonna do. So without any TA or whatever, let's just, oh yeah, I had to mention the volume. So let's go to the monthly chart. So this is the monthly candle. It's closing in 4 days. So it's very important to make a decision within the next 4 days to the week, because of the fact that a lot of these programs are set to make decisions based off of the end of the weeks and candles, basically candle closes. So I want to see if we're going to start to downtrend and see like, or if we're going to close strong here on the monthly in 4 days. So one of the strategies that Gann kind of used and for trend following is basically, this is higher low once again, right? So these are perpetual, so it's only the history on the futures market. So higher low, higher low, higher low, higher low. So that, yeah, this is a futures coin as well. This is the inception, and it's basically uptrend the whole time. So so again, here's the weekly chart with the higher lows, just forming just higher lows, right? And then this one here was our little abnormal move, just like this one here, and then continue this trend after it was a normal move. Like on the weekly it's normal, but on the daily what we were looking at was these little normal moves, but on the weekly this is a normal move. Okay, and then it continued the trend. But so you can see that, what did I, so on the monthly here, this 1 month, we have 26 billion. There's only 6 billion supply right now, 6 billion, and we have 26 billion changing hands. So that means that the total times that the total supply has changed hands is 4 times at the top here. That is basically what Gann signals as distribution. It means that the market makers are not they're not that they are selling, or something's going on with the volume, because this is huge, right? 26 billion at the top here. So let's take a look and try to detect what's actually going on right here. So of course we had our huge sell-off. We actually had one at 80 cents as well. Huge sell-off though, and we want to ask, okay, is that distribution, right? So that was a big one. Just this week, within 5 days, 5, 6, 7, or 4 days, we have 7 billion as volume, which is the total supply just in this 1 week candle. So it's obviously telling you that these guys are over trading, and I don't know, like honestly don't think we're going to break the top. I think that this is 5 waves. I think it's done. But if we break the 61.8, I'm wrong, and it's definitely, if we close above it, it's at $2.94. I would be watching the monthly chart and the weekly chart for its close, and the low on this weekly low here is at $1.06. I don't know if that's a lot of risk, right? That's 84%. So that's kind of a lot of risk for your profits anyways. Let's take a look at the daily here. So the rule of 3 is something that Gann uses. So this is what I'm going to anticipate. Maybe we're going to get a consolidation and wait for this time indicator to get hit tomorrow. We get a little bit of consolidation, maybe chop around, and then once this one opens, the bots are like really angsty or the market makers, I should say, angsty because the fact that they know that the rule of three, they have knowledge on this rule. The rule of three is if it hits this, they sell. So 1, 2, 3. Right now it's this one here. So you got a lot of wiggle room. It's a deep candle, and it's a lot of risk. So if it starts to fall down, of course, but I don't see that happening on this exact candle. But the next candle is like everything, you know, starts to kind of fall down, right? So like this one here was an anomaly. It's not supposed to happen like this, but it happened. 1, 2, 3, and that's where like basically they just dump like that, crazy. And then the same kind of thing happened here. So 1, 2, 3. This is where the stop loss was, and then short squeeze, and then continuation. So I really do think this is a bull trap. He also used this one here. So Fibonacci times are really good. Here's a daily chart. So here's the 8 days. 8 is Fibonacci number. And also to the way downwards, it was 5. So 5 is a Fibonacci number as well. 5 is actually a bullish cycle a number, and 8 is a total cycle number. So those are two signs just right there. And then the bear cycle numbers is 3. So I'm gonna anticipate a downwards move. Yeah. Yeah. Just according to all the rules and stuff. Alright, so I mean, it's still above this trend line here. It just depends about what's your risk tolerance, you know. You don't have to sell your whole bag. You can sell like what, 25%. These are position sizing strategies and whatever, like you did last time. You know, you bought it back lower, which was great, absolutely great. And you got some more ammo. You got some more ammo, right? Some more capital or whatever, and or risk multiples, whatever you call them. I like to refer them as ammo. So see this one right here. This is a 3, right? So 3 candles. That's a bearish number. So honestly, man, I just don't see this continuing upwards. But these moving averages is the strategy that I use for my trading, and they're really awesome. They're a little bit hard for just like to get through, but they work very well. Like for example, if I just take a look at the 5-day chart, and I'll bring to you these. I'll bring to you the attention of these when it's, you know, relevant. For example, 2 days ago we closed on the bullish cycle. Okay, and again, this is the 5-day chart, is a bullish number. Not only did we bounce exactly on this moving average, which was amazing. I don't even know if it hit it or what. I wasn't paying attention to it because there's so many time frames to look at, and I'm not a robot. But the more important thing to look at right now is that it wicked all the way through here. So that's what the bots do. They basically, they just buy it all the way up and then they close it above. You can see that that's what they do, the whole trend upwards, and they try anyways. Okay, they try anyways. Okay, so they're still uptrending it. This one here is at $1.65, but we're getting some serious wicks to the downside. So I mean, that could be our nice support here and continue to trend, but like we're getting some serious weird action, right? So let's use log scale. It's a little bit easier on the eyes. And 3 more days on this candle as well. I have a bear cycle, but let's not get into the bear cycle. This is a pivot. This is a nice pattern actually on the 3 days. But yeah, so the 5 days is really important, how we closed above. That means they're still trying to keep it up. They're still trying to keep it up. Once you see it starting to close underneath there, they don't care anymore about the trend. They're not defending it. So I mean, I'm looking at the 21 hours. That's the next smallest time frame to look at. These are cycles, and I'm making like docs to and also here's the 5-hour chart here. So this one's like the next cycle. This one's kind of important. So for example, like when the 89 reaches the bottom here, we'd expect this 89 to uptrend right here, this 89 right here to uptrend, but I don't think this is gonna happen. I don't think it's gonna happen that much. And so basically it goes from what I've discovered here with the strategy is that it goes from a smaller time frame, and then it goes onto a bigger one. So first it starts off to a small time frame, and then it goes on to a big one. So we can see using Gann's rule right here, this is the hour chart, and as an abnormal move, no, this is still normal in the trend, but we don't want to break this low because then it becomes abnormal. So you just basically take it, okay, this is the trend, so we took this one right here, 16 bars, 23%, and then from the top to the bottom 16 bars, what do we say, 23%. I gotta fix that, but yeah, so that's pretty much it for this video. 23%, 16 bars, and then it starts to uptrend. So that's a normal move, but if it starts to continue downwards, then the trend's going to be a little bit in trouble here, and that's what kind of I'm expecting. We still have our trend line that is holding excuse me, this one here on this one here. So yeah, this was the B wave the picture that I sent you, and the reason I have this box here is just because this Fibonacci right here is a B wave target, as well as the 0.9 here. These are all B wave targets, starting from here to all the way up here, depending on how much pressure there is to the upside. So it could have went all the way up here, just this box, and really it's this line right here, this trend line that we're watching. So I mean, this can continue upwards, and that's what we're looking for here. Like, look at this one. Was this a normal move that we just got? So take a look at the price and time. Time is more important. Hey, take a look. Perfect. And then they sell off, do the same type of move. I don't know if you're still watching, but I mean, these are discoveries pretty much, and this is what we would be anticipating with the time. I don't know if the price is going to get there, but there you go. That's something to look forward to at the end of this video. If we start to break through this level here, though, especially with the 89 moving average, reaching the bottom of this trend. So this is the 89. This moves with price. The indicator that I made there is this moving average right here. So this is the 89. I should number. I'll change that. I'll put a number there. But so the 89's not quite yet at the bottom. It's going to be at the bottom here in 4 hours. And so the expectation is that we're going to stay above this moving average in 4 hours so that we can continue this uptrend that I just deleted. This uptrend, which is a normal move right here. Let's just eyeball it there for now. There, and then just that's what we are expecting here. So something like that. Yeah. So the time on this one here is May 28th, and that's it. That's it for this video. Actually, I would have to move it back here. So the time on this one's May 28th at 5 a.m. UTC. Yeah.